This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. I made it back. We're back live on Benzinga Live. Welcome back, everybody, after a few-day hiatus. It's good to be back. Happy Thursday, everybody. Shout out everyone who's been tuning into our cannabis conference coverage over the past 3 days. It's been a lot of fun down at that conference. I actually wasn't there personally, but I've been... oh no. All right. Oh no. All right. We're gonna troubleshoot this. 1 second. Can you hear me if I talk into this mic? Here, maybe I'll just switch seats real quick. I think the other mic is on. How about now? Yeah, I'm live right now, but I think this mic was off, but this one's on, so I'm switching seats live on stream. Other mic is much better. Yes, let's go. You guys can hear me now. All right, what is up, everybody? It is good to be back. Luke, you want to come say, just wave to the fans real quick? Everybody say hi to Luke. All right, guys. Sorry about that. We had a little bit of technical difficulties, but y'all can hear me now, which is good. But yeah, guys, we've had our cannabis conference the past few days down in Chicago. Again, shout out to everybody who's been tuning into some of that coverage. If you're in the cannabis space, invested in some of these companies, you know it's kind of been a whirlwind, to say the least, over the past couple years. So it's good for these companies and their investors to get together and talk about where this, where that market is going, what they have to look forward to. Again, really fun. If you guys are in that space, you should make it out to our next one. Probably will be in Miami coming up in the spring. Sorry, guys. Just give me 1 second to go into a couple more technical. All right. All right, guys. So since we've been gone on Benzinga Live, we have a lot to discuss. The biggest storyline of the week, and I'll pull up my Benzinga Pro. The biggest storyline of the week has been... or was, I should say, the CPI print on Tuesday. I'm glad we weren't live on Monday, to be honest with you, because I would have predicted that the CPI would have been a beat, and maybe even a big one at that. I mean, we had been sharing the, gas prices every day, seeing how much those have been falling over the past 2 months. But just like every other CPI report that we've gotten the past year, there were certain things, driving this one higher, and one of the biggest ones this month was rent. Rent is a little bit less sick, it's a little bit more sticky than other areas, right? Gas prices went up really high really fast and then fell quickly. Rent isn't gonna fall that quickly. So we'll talk more about the Fed. I actually have a couple we're going to have some people coming on soon to talk about what the Fed can do here. But, I mean, I don't know what else to say. We're going to have Steve Kalajyian and Rob Roy on, so a couple technical traders. But for me, I mean, it looks pretty much like we're heading to those June lows and potentially even lower. So, yeah, I mean, I don't need to tell you guys, how bad, if you guys were out here trading, how bad Tuesday was. What was that? The Qs finished down 5.4%. The NASDAQ 100, so the Qs really just tracking the top 100 stocks in the NASDAQ, I think by market cap, not sure exactly how that works. But, I mean, right here, September 13th, down 5.4%. I don't even know the last day we had a day. Actually, I do, because I think I saw a headline about it that day where they said worst day since June 2020. So what? It's September 22 right now. So 2 years and 3 months it's been since we've had a day that bad. And then the next day, bounced back a little bit, which I think a lot of people were pleased to see. There was kind of a rally at the very end of the day yesterday to get us into the green, showing that, okay, maybe that was a little bit of an overreaction. But now back in the red, and not really. I mean, it's not like, oh my God, it's another Tuesday, but the Q's being down 1.2% and the SPY being down 0.6% isn't nothing. Jonathan Lovelace is asking am I bearish now? I wouldn't say. I don't know. I mean, I would say I guess I wouldn't be surprised if we keep moving lower or make new lows in the short term. I think like long term, I'm still bullish. I think we're going to be fine in the long term. I think, I'm personally like still going to be continuously adding to my retirement accounts every 2 weeks when I get a paycheck. If I really thought, oh my God, the market's going to crash and come down 80% from here, then I probably would stop those investments. Every 2 weeks when I get paid, it comes, whatever 5% of my paycheck goes into stocks. And if I really thought, okay, the market's going to, crash like 07, 08, S&P 500 comes down 50-60%, then I would probably stop those investments. Why would I want to invest in something that's going to depreciate 50-60%? But I think a more likely scenario is we continue to move lower for a little bit, maybe even make new lows, and then, things might start turning around. Maybe at that point, with a couple more months of fear, and maybe at that point, inflation really will start coming down. I don't know. Patrick Starr saying, am I buying NVIDIA? That's a good question because I'm pretty sure I said if it got down to 130, I'd be buying it, right? I forgot exactly what the number I gave. Maybe 124. I believe it was when David Green was on. We pointed out one of his levels. I mean, a lot of my investments right now go into growth ETFs that hold a lot of NVIDIA. So yes, in a way, I'm not out here buying individually NVIDIA stock right now. It will start to get very, very interesting. ES saying this, if I thought the market was going to crash, I would buy ES naked puts 36.50. Yeah, I mean, there's a lot of ways you can play bear markets, and there's a lot of people in finance, a lot of wealth managers, a lot of hedge people out there that say they you make more money in a bear market if you're trading it right. Which, I mean, again, I don't have a crystal ball. I don't know where this market is going. If I knew exactly what level, we were going to hit here on, we'll go back to the SPY and bounce back. And, then I wouldn't be here. I wouldn't be on YouTube streaming. I wouldn't even have a job. I would be just a multi-billionaire, but no one knows what the market's going to do. So what we can do is we can look at the data and make inferences. So again, I'm going to bring Steve Kalajyian on here in a minute, and then, another technical trader later in the show. But from my perspective, now my sentiment opinion has slightly changed to where, okay, up here, when we were going basically straight up from mid-June to August 15th for 2 straight months, I did not think we were going to go back and retest those lows. I didn't think, okay, we were going to, go up another 20% and make new highs. I thought the most likely scenario was some chop, whatever. This has been a very drastic move back to the downside over the past month. And as a trader, as an investor, I hold my right to alter my opinion. Now my opinion is, hell yeah, we could test new lows. And we could go even lower than that. But does that still think I think there are a lot of people out there giving a big doom and gloom scenario about, a huge something break, like maybe even potentially worse than the 07, 08 financial crisis. And I'm not saying that's not a possibility. Of course it is. But my job, or when I'm putting my investor hat on, I'm trying to invest in what I see as most likely, right? Not what's there a chance of. I want to adjust my whole portfolio and whole investment strategy just because there's a chance that Europe could go through this energy crisis and something could break, and then you see this global recession, and next thing you know, SPY's at 180. I don't want to build my whole portfolio just based off that chance. If that happens, will I be worse off than if I had position for that? Yeah, of course. But that's the risk I'm willing to take. And that's what you have to ask yourself as an investor. What is the risk you're willing to take? I'm willing to take the risk that there's, that I'm not going to see a 50, 60% decline in the S&P 500. And then I'll keep adding to my positions. And knowing that, hey, we could keep going down in the short term, and we probably will. But again, if I buy SPY right here, right, say 10% of my paycheck today goes into the SPY at $392, and it depreciates another 10%, so that's another, $39. And now you're back at 350, which is pretty close to where we were here. Okay, so what? So I'm down 10% on money I put into the market today that's in my and I'm talking about long term here. I'm talking about when I'm putting money into my I'll get right to you, Urban Firms. When I'm talking about putting money from my paychecks into my Roth, I'm talking about long term, like stuff I'm probably not going to touch till retirement, or hopefully not going to have to. So I don't think it's going to matter in the big deal, but still, I would halt those investments if I really thought, that we were going to see some huge crash. And we'll bring on Kalajyian. We'll talk to him. We'll see what he's thinking. Urban Farms asking, hey, Aaron, a month ago, you said you may be buying NVIDIA in the low 130s. What do you think now? Where would you be willing to purchase NVIDIA today? So, we talk about this all the time, how sentiment follows price. So now that the price is down here, the sentiment's a little lower. I mean, for long term, I wouldn't mind buying some NVIDIA here. Again, it all depends on your time horizon. If you were looking at this as like a short-term swing trade, I would say, hey, look, this is clearly in a downtrend over the past month. I wouldn't want to try to catch this falling knife. I would, again, if I was trying to swing this on a shorter time frame, I'd want to see it start coming back up and then try to play it while it's on that upswing, as opposed to trying to catch a falling knife. Now, as a long-term investor, I would need to do. I mean, it's still very expensive by a lot of metrics. I don't know how much that matters with a company like NVIDIA, but yeah, I think, if you were going to buy this Urban Farms and hold on to it for 10 years, I'd put a lot of money that 10 years from now, NVIDIA's share price is higher than it is today. Again, but I wouldn't be going out and buying this right now for a swing trade, even though I said I liked it at 130. Now that we're at 129, I don't like it as much. We talk about that all the time, All right, guys, time to bring on our first guest of the day, Mr. Steve Kalajyian from TradeEasy.com. Without further ado, let's go ahead and give Steve our special intro and bring him on the show. Mr. Steve Kalajyian, how you doing?
Hey, Aaron. Good morning. Good morning, everybody. How are you?
I am good. How are you?
Great. Love this market. Great volatility.
Yeah, I was just talking about that a lot of traders, a lot of, whether you're a trader, hedge fund, a lot of people talk about making good money in bear markets.
Well, as long as you have volatility, doesn't mean if you're in a bull market or a bear market, as long as there's volatility, if they just move in 10-handle range in the day on the S&P, you just sit there and it's like, oh, what a horrible day, But we're moving, They ran this morning from 40 up to 77, from 77 all the way down to 22. I mean, you can't, these are vicious moves here. Yesterday we had a buy divergence. They run from 39.29 to 39.75 in 20 minutes, Yeah,
you're talking about yesterday afternoon, kind of heading into the close there?
Yeah, it was 20 minutes to go, and we were trying to buy. I had a big buy divergence, and I had bids lower, not by much, and it just ruined my night because I knew it. I had sell divergences on the reverse ETFs, which picked it up. Where then I said, wow, look, we're gonna get a sharp bounce. I didn't think we were gonna get 40 handle. I thought 20, but we ran 40 like that in 20 minutes. So the market's really today we had the low at 21, 22 and 3/4. I was 21 and a half and we missed it. But that's part of the game. But we had other things, and that we had Apple, Microsoft off the lows, a couple other names, and you can't get everything as long as you can identify it though. But no, the markets are good. We hit that high of 41.75. I had significant bearish pattern going into the CPI number. They were trading around the 66, 68. Boom, they pushed up to 41.75 after that CPI number, and then bam, 100 handle, one bar, boom, 90 handle drop on one bar in a 5 minute, and it was just ugly after that.
Yeah, I got that right here. You can see.
Yeah, and look at that consolidation right after. And we had a monster short above the 40.15. I posted on Twitter, I posted in the channel and everything. We had a monster sell off the 15-minute time frames. We had major sells on the 30 and hourly. And I thought we were going to get like a 20 handle, 25 tops, 30 move down. And what they do, they went from 40.16.5 all the way down to 39.38 that Friday afternoon. So I mean, you're talking, almost 80 handles move down from 12:30, in 3.5 hours. And you just saw the selling that was just completely insane. I don't think this is over. I think we have the next 5 or 6 weeks of going into, obviously, September, October, and it's already lifting its head here to show how ugly. And the real question we're going to have here is, are we going to hold that low above that 36.39 like as a double bottom, or are we going to make new lows?
Right. And I think right now it's a very fair kind of where I'm at least in my short term to medium term. I'm like, all right, let's wait to see if we get down there. And then once we get down there, let's see if we make new lows. Because if we make new lows, then I'm certainly bearish. If we bounce off there, then I'll say, okay, let's keep watching. Let's see how long, this bounce goes. So I'm looking right now at the 5-minute chart. And we're right at where we got this big rally yesterday. So kind of, we're not talking about the 36 levels, but here similarly, I'm curious if we're going to break through these lows from yesterday where we got that big rally, or if we're going to bounce here again. So heading into the close yesterday, we hit a low of 391.12 on SPY. Like you mentioned, went from about 391 up to 397 in about 20 minutes. Currently, we are at 391.34, 390.93. So it does look like we've kind of broken through that low yesterday, but we'll see if we get a bounce there.
We made a new low today, yeah. And then we had the big buy divergence, and they ran from 22 3/4 all the way up to 43. They ran 20, 21 handles on the S&Ps like in about 30 minutes. Short covering rallies are, I tell people all the time, and I'm on my 40th year. Bear market rallies are more vicious than bull market rallies.
Right. Yeah, and if you look at the table of the best days in S&P 500 history, the majority, I think 17 of the top 20 are in bear markets.
Mm-hmm. Oh yeah, monster. Again, like I said, I don't think the low. I don't. We just keep. Last time I was here, we brought up the chart. And I just kept on showing you how we were making lower highs, lower highs, lower highs, lower highs. And I think that's going to continue going forward.
Yeah, I mean, there's until, we see, I think a lot of people felt like here the bottom was in. I mean, we've basically been in a bear market since the beginning of 2022. We're now in September. So for the past 9 months, right, returns have been pretty lackluster. You had a little rally here in March. Then you had this other little rally here from June to August, but nothing to really, bring new investors into the market, nothing to really get people excited. So
look at the 3 peaks, 3 lower highs, and we're going to do
here, and here.
Yeah, and then you go down, you're going to make another one. So I'll tell you something interesting, really 2 interesting things. Today, it was brought to my attention that the 30-year mortgage was above 6% for the first time since 2008. That's really bearish for the economy. We were just at 2 3/4, 3 1/8 about 4 or 5 months ago. And when you see 6% mortgages, that's not good. Second, in order for new bull markets to start, you have to look at the monthly chart, right? So I did a lot of analysis work the last couple of days, and I have certain indicators. And based upon the time horizon, this is not going to bottom out till the second quarter of 2023. So which leads me to believe we're going a lot lower. So if you're looking at buying NVIDIA, I wouldn't buy NVIDIA here. I'd be buying NVIDIA probably between 95 and 05. Or 85 in par.
Yeah, and that's where I always try to, when people ask me these things, and I'm not a financial advisor, I don't do any of that stuff, but when people ask me those things, I always say, like, the most important thing is your time horizon. Because like you said, I mean, if Nvidia does get down to 95 or in between that range of 95 and 105, I probably will be buying some down there. But if I bought some today at 130 and it gets down there, and I am planning on holding it for 20 years, and then by the time I sell it, it's at 500, I'm not going to really care that I got it at 130 versus 95. But if you're trading, which is what you're...
There's no guarantee it's going to go to 500. You know, this brings me back to a great story. But like I said, I've been around 40 years. It was a really great growth stock called LA Gear when I was growing up, and I was on the floor in New York Stock Exchange. It was right in front of me, right? And I watched that stock go 45 to 90 split, 45 to 90 split, 45 to 90 split, right? And then the stock went out of business. You don't know what can happen in the future. You don't know what can happen to NVIDIA, right? I'd rather buy it right. I'd rather buy the market with my technicals, because I believe everything's, is pure mathematics, right? And here's the other thing that's going to signal a bull market, right, Aaron? We've been around a long time. Is when all these analysts, I don't go by any of these analysts, but I use them as a barometer. When they start cutting, forecasts, when they're all jumping on board and lowering their estimates, not once but twice, that's when a new bull market's going to start.
Yeah, and I've seen that a lot. That a lot of people, a lot of people that are bearish right now, or net short, are calling for that. That there has to be some pain in the labor market. There has to be, something to break before we get that capitulation and truly bottom out. I mean, I personally don't know. Like, it seems like a lot of the things we've been worried about over the past 6 months have started to get better. Obviously, inflation's been the big thing that people are worried about, and right now the big question is what's the Fed gonna do? I think a 75 basis point hike next week is pretty much baked in at this point, but some people are calling for a full percentage point.
No, it's going to be 75.
Yeah, I know. That's what the and I'll pull this up too. That's what the numbers are indicating toward right now. The CME watch tools giving a, let's see if it loads for us. Yeah, here we go. Giving an 80%.
But 80%. But where's it go out to 2023 on this?
I'm not sure. Let's see. Yes, we can go to like March 2023. It's saying the most likely, this is saying, is in between 425 and 450. So in between 4.25% and 4.5%.
Right. That's where it's going to probably top out. Okay.
Right.
But here's the one thing, I'm being around as long as they have been getting, crucified by portfolio managers. I don't watch TV much, or by traders, by the American people, saying, like, if that's your target rate of 2%, you don't do anything until we get to 8.5%, 9%, the highest in 40 years. Like, there's no credibility here. And I think people are on this time. I think this time now, and I'm in this 40 years, okay? I think this time people have had it with them. I think that people think that there's no reason to have the Federal Reserve, that interest rates to speak for themselves. You just trade off the 30-year bond market, or the 10-year. I think that they are going to cripple the economy, put us into a recession. And when they could have recognized that there was inflation probably back last year and started raising a quarter here, maybe a half a point, and see if that would have brought down some of the CPI numbers that were booming months ago, like 6-7 months ago, that you saw high CPI numbers, higher than we've ever expected.
Yeah, I mean, I think right now a lot of people have lost, confidence in it. I mean, look, we've been, how long have we been raising rates now over the past, 5-6 months? Like, really?
4 months.
4 months. And we've seen gas prices fall, sure, but I think people would have liked to see that would have had an immediate impact on inflation. Maybe it needs to play out longer. But the obvious thing, right? That people are like, oh, well, they should have done it sooner. Yeah, of course. Well, now we're where we are at. it doesn't seem like raising rates is really helping, at least in some
No.
areas of inflation. And some people, I read an article from an economist that covers the housing market, was making the argument that now, with mortgage rates so high, above 6%, like you mentioned, people are going to, that were going to buy a house, are going to say, hey, let's wait and keep renting. And that might cause rent prices to stay higher because it's actually raising demand for rent.
Yeah,
So
no, that's true. I saw that, and I agree that. And even like, look, I'm not gonna look. I watch oil like with my right eye, right? And I see oil go from 111 down to 82. Gasoline, I paid 365 here in New York, and about a month and a half ago, I was paying 529, right? So here I'm talking to a big hedge fund guy that I know, and he's like, Stevie, what do you think? I said, I don't care what the number is, we're going down big, right? And he said, but what do you think of the CPI number? I said, well, I think that it could be better than expected, and where you sell the good news, and if it's worse than expected, then they're going to get crushed, right? So I was thinking, because the CPI number, factors in, food and energy, that because gasoline dropped so much that it was going to have some type of a positive impact. But here's the thing, food prices went even higher, right? So food's not like up 13.5%. So that really, I think, put a lot of fear into the market, where that number made that CPI number be higher than expected.
yeah. And again, I think, that's been the biggest thing that people have been watching, inflation. And of course, connected to that, what the Fed is going to do. A lot of people were expecting this number to be a sign that, okay, we've seen inflation, kind of start to roll over and come down. Obviously, that wasn't the case. So now we're back where we were, looking at the S&P 500, we're back kind of where we were here, where we knew, okay, the Fed has no reason to even think about start pivoting. It's the classic don't fight the Fed, right? If the Fed's going to keep raising rates, mortgage rates are already at 6%, right? We're probably going to keep going lower as the Fed keeps raising rates. And then eventually, when that, like you said, that it'll probably top out around 4.25%, 4.5%, and then we'll start easing again. And then that'll probably be a little bit of a better environment.
I'm telling you, you're probably going to see this pan out by the middle to this third quarter of 2023. And that's where I think a new bull market will start. I'm telling you, you got to look at the monthly chart. And I can't show you because I don't have my screen share here. But I have an indicator. And when this and I counted it out, and it actually goes out, I think, till March, right? And if this indicator keeps doing what I think it's going to do, this will be the first time since 2008 that this number would get below a certain number, right? Now, again, you could get a capitulation on the S&Ps on the 2,800 here. You know what I'm saying? Which would definitely bring that number below the number I'm looking at, and then base there or whatever. But when this number when this number that I have gets below a certain other number, and it's heading that way right now, and it stays below there for a few months, you're going to have a monster bull market when that happens.
Yeah.
Now, again, I'm not saying it's going to come from here. I'm thinking it's going to come between probably the 2,800 and 3,300 range.
Got it. All right, Steve, we're a little past noon. See if we got any other questions in the chat. Always a pleasure to get you on, man. I think right now it's a very interesting trading environment. You've got a unique perspective. So thanks again for hopping on. I'm going to drop that link to Trade Easy in the chat. If you guys want to learn more from Steve, hit that link, tradeeasy.com. Steve,
thanks, Aaron.
enjoy the rest of your day, man.
You too, bro. Have a great weekend. I'll see you next week. Thanks, Aaron. Be good, everybody.
See you next week. Of course. All right, guys, tradeeasy.com. Go check out more from Steve Kalajyian. Yeah, I mean, the Urban Farms Project, there's always going to be, right, the Fed is supposed to be apolitical. Of course, like everything else, like the Supreme Court, like whatever, there's always going to be political, interests being taken into account. I mean, honestly, Biden might be regretting not going with Lael Brainerd over Powell right now. I mean, let's remember, Powell is a Republican that was appointed by Trump. I personally don't think Powell really cares about like Biden versus Trump, or that he has some like, duty to the Republican Party. Like I don't think, if I don't even know if anyone's trying to make that claim out there. I would argue against that. That if people were trying to say Powell's purposely going to try to raise rates to tank the economy and the stock market into the election to make Biden look bad, I don't believe that whatsoever. I think Powell knows full and well he's dealing with real Americans, jobs, and livelihood here. I think the inflation we've seen is the most probably one of the most concerning things the Fed's had to deal with outside of the 07, 08 great financial crisis and then the COVID pandemic in 2020. They're in a rock and a hard place. I've been saying this for like 3 months. Like, I'm not in favor of raising rates enough just to bring inflation down if it means you're gonna, get people fired essentially from their jobs, right? Have a turnover in the labor market to where all of a sudden people are getting laid off. I don't agree with that, really. I'd personally rather pay a little bit more for gas and say, okay, I'm okay with 5% inflation instead of going down to 2% if it means we don't have to have, unemployment tick up in a big way. And I think that now, especially with the fact that, and especially now, I think with the fact that inflation hasn't come flying down even as the interest, I think that almost gives the Fed more reason to say, all right, maybe, 4.5%, maybe we try to get to like 3.5%, because it's like, all right, we can keep raising, but it's not doing anything for inflation. So what's the point? All it's doing is helping drag down unemployment. They have a dual mandate, the Fed does, employment and inflation. And right now they're trying to bring down inflation, and they're willing to bring down unemployment a little bit to do so. But right now, if you're raising rates and inflation staying here, and all that's happening is unemployment's coming down, but inflation isn't budging, well, then you're going 0 for 2 on your dual mandates. On your dual mandate. He changed his tune after he re-upped. I don't know what that means. I mean, and you will have, I think, say something nice about the Fed, right? If everyone's, everyone's been, talking about how bad the Fed's been, whatever. They'll say the one thing as far as different, groups out there, different political groups. I think there's a fair amount of discrepancy in terms of idea and sentiment, right? You had Lael Bernard, you had some of the more dovish members come out and say, we need to talk about the danger in raising rates too high too quickly. Of course, the more hawkish members of the Fed that really see this as, okay, inflation is our end all be all. That's what we need to be focused on right now. Hear that stuff and they say, no, what are you guys talking about? We don't want to hear you even say anything like that. We need to just show the people that we're solely focused on inflation right now and willing to do anything it takes to see that come down. And basically what that means, and what Powell has hinted at with pain in the labor market and all that, is the Fed is willing, or seemingly at this point willing, to engineer a recession, engineer unemployment's rise, to have inflation come down, because at this point that's the only thing that they can really do, right? We've talked about this all the time. The Fed has the ability to limit limit demand, right? To impact the demand side, but not the supply side. And a lot of the inflation, basically all the inflation we're seeing is coming from the supply side, right? Supply chain issues in the global food markets, right? Housing. We are in a housing shortage right now, and mortgage rates are up to 6%. That's disincentivizing new building. So you have a shortage of housing, and we are currently going to disincentivize new building. What's that going to do? It's going to absolutely crush demand, which eventually will hopefully bring rent and housing prices down. But basic economics will tell you that if you bring supply up, that will bring the price down, right? If demand stays steady, which for housing, right, pretty steady. There's a certain amount of people in the country. Everyone needs housing. There's people, that go out and buy 2 homes. Investors, right? BlackRock have been buying a lot of single-family homes, increasing the demand. But I would think that increasing the supply would help bring prices down, both in rent and in terms of housing prices to purchase. But we're not in a position really right now to be doing that. What are lumber prices right now? It's a good question. We don't have straight up commodities on. Let's just Google lumber price chart. Lumber. Go straight to I mean, yeah, you can see here the 1 year chart. Lumber was, I don't even know what this is going based off of, but 1,300 in March down to previous close was 554. I don't know. Golden Cross saying I might want to read up on this, AB, about the economics of the housing market. I know I'm saying that what the Fed's doing right now can and will bring down inflation, but it will be doing so by crushing demand and most likely associated with some sort of a recession. And I'm saying I'm in the camp where, and here was the thing, was you had people, and right, it's not that simple. I mean, I talk about this all the time. I talk about this with economists all the time, that economists have a job where it's kind of like the weatherman. You can be perpetually wrong and keep your job because there's no right answer. There's no one thing. But my biggest problem, I think, with the direction that our Fed is heading right now, and with what I think the consensus economic, agreement is right now, is that people have said, okay, we've never been able to bring down inflation this high without a big recession, without unemployment coming up. There needs to be pain to bring inflation down this high. That's what's said, not, from me, but from reputable, like big time economists. And my point to that is, like, what's the sample size? 2 or 3? Like, we've had inflation. Like, it's not enough to say that it's impossible to bring down this sort of inflation without seeing that sort of pain. And when I'm talking about pain, I'm talking about like real everyday people getting laid off, still in a high inflation environment. Maybe inflation's dropping. Maybe, 6 months from now it's from 8 to 4%. But if someone gets laid off in that time and now prices are still higher than normal and they're laid, it's just, to me, like, I guess I would like to see. Maybe it's too ideological. I don't know, maybe idealistic, like to think like, oh, it's possible that we can try some economic strategies to quell inflation, to bring inflation down without screwing over a lot of people. Yeah, I think Iron Fist, I think a lot of people think, we're already in a recession. I think there's been a lot of things over the past few months that it's been weird, right? People have been calling for, we've been in a recession and then we've been adding jobs, but you've seen GDP come down. I think productivity has been the biggest thing there. But again, I'm probably in a different camp than most people on this. Like 2K Guru is saying, let it all tank. Again, a lot of people out there that think like, okay, I don't care if Wall Street, loses a bunch of money, whatever, they're all greedy, and that's fine. But you also got to remember that if we do see a huge recession, an 07, 08 recession, it's not just Goldman Sachs, bankers, right? You're talking about teachers, firefighters, policemen, you name it, their pensions will get wrecked. A lot of them probably getting pretty close to retire. It's not a good situation. I just hate, again, and if you're bearish, if you're net short, you are hoping the market continues to move lower. I wouldn't want to be rooting for that right now. All right, just catching up on the chat. I do see our next guest hanging out in the background, Mr. Robert Roy. So here in a couple minutes, I'll bring Mr. Roy on, see what he's been watching. Crazy week this week in terms of volatility. We talked about that day on Tuesday. That was an absolute bloodbath. one of the worst days on the market since I've been trading, since I've been covering it. Again, the headline was worst day since June 2020. I gotta be honest with you guys, I don't remember that day, June 2020. What I remember about summer 2020 was that the market was up every single day. So maybe that was just some like big sell-off. Bree, I like your name. It's my name. That's fair. It's not about rooting, but and that's fair. I think, again, I would say to me, there's a difference. Like, I would feel different about if I like sold everything in my portfolio and said, okay, I think the market's going to keep moving lower. I want to stay all cash versus if I was like out there. Again, I don't think there's nothing wrong with shorting, nothing morally, ethically wrong. I think me personally, like, I'm hoping somehow, we can avoid, seeing the unemployment tick up and a recession and all this. I mean, I know there's a lot of doom and gloom out there when it comes to the energy situation in Europe. You have the war in Russia and Ukraine. There's a lot of reasons to be bearish out there right now. I understand that. I also do feel like the short trade or the bearish trade is getting a little crowded, which scares me. Let's go over to this AA sentiment survey. Okay, so we've actually seen this tick up. I'd assume, because this was collecting we had a couple good days. I'd assume this ticks back lower in terms of the amount of retail investors bullish next Thursday. Or next Wednesday. We'll check that the 21st. But I would estimate that after Tuesday and after this week, we'll see that start to come in more. But again, I wasn't trying to say I think there's anything wrong with being short here ethically or morally, nothing like that. I think I'm hoping I'm still adding to my long positions right now, so I'm biased in the sense that I think there is a scenario where we can get out of this essentially without some 07, 08 type recession. Again, I've said all show. Does it look like we're gonna go back and touch those June lows? Yeah. Could we go from there and make new lows? Yeah, of course. And I'm gonna hold my right I'm gonna retain my right as an investor, as a trader, as someone on YouTube talking to you guys to change my opinion as the data and as the market changes. Yeah, Easy Mike, that's a good point. I think I have a lot more confidence that I can keep investing in my long-term, like I can keep adding to the S&P 500 in my portfolio even as it's drawing down because I can hold on to it for a very long time. If someone was closer to retirement, I probably wouldn't be telling them to be buying right now. Exactly. Like close your eye. So my situation, what I'm doing and when I'm talking about my long-term investing is probably a different situation than a lot of people are in. And I'm blessed and grateful to be in that situation. All right, guys, let's go ahead and bring Mr. Rob Roy on the show, see what Rob's been watching. Again, I'm curious to see what what he was doing on Tuesday when the market was just absolutely tanking. Let's play our special intro, get Rob on the show and see what he's doing. What is up, Mr. Roy? Good. How are you?
Sorry, didn't mean to talk over you. I'm doing great. Yourself?
Pretty good, man. I actually just got back from a conference in New York last night, so I wasn't, doing the show, wasn't really watching the markets as much this week because I was busy at this conference. You know how conferences go. You're just running around talking to a bunch of million people.
Oh, yeah. I'm there next week. I get it. I'm in Florida for 5 days next week.
Awesome. Yes. So let's talk about what you've been trading this week, kind of where you stand. I'm curious on Tuesday specifically, what you were doing, if you were hands off trying to, trade anything on the short side.
Tuesday was a good day. And for us, again, short is just buying puts, right? So if you're a stock trader, your only option in those bearish days is to short the stock, which carries a lot more risk than if you buy a put option. But you have to understand the mechanics behind it. So We were doing our live show at 8:30 in the morning when the announcement came out on CPI. We watched it tank. We made a call on Adobe. At that point, there was some news out on it, and the call worked out extremely well. Actually, I was just trying to see, as you were talking about Tuesday, if I had still the trade setups from there. I do. So this is in one of our programs. So we're looking at Tuesday was that the 6th? All right. So we had Apple and we had United Healthcare is what we wound up doing on, it was Tuesday the 6th, right? Yeah. So we got Apple we were up a little bit. We broke even on United Healthcare. So it was a whack day. But we set up that drop down, set us up for putting the S&P and stocks in better positioning from where we were. And today's move was no different, right? So if you look, we had a couple of trades all on the 8th and 9th go off there. Chipotle, Costco, Spiders, and W-Day. All profitable trades for us, the ones from this last week. So overall, very happy with it. But the average person, it's hard for me as well. I sit back sometimes. I get in position 1 in the chair, and I really am just going to watch. And today was no different. I mean, you look at today on the S&P, and that's what I've got right here is S&P, and I wanted to bring it into a 5-minute chart first. But we had a small gap down, right? So the initial anticipation is let's go ahead and trade bearish. And this horizontal line, now, and you've heard me talk about it before, that's a major fib level. If we bring the daily chart back in, for those of you that are Fibonacci traders, the purple line is the 618. It is the most important number in the universe. I'll argue it to the death with anybody. There is not a more important number. It shows up in everything in our lives. The distance of your nose to your ears, your eyes to your nose to your mouth, your chin to everywhere in human nature, it shows up. So we're looking at that 618. We broke through it right here, okay, on Tuesday. We came back up and retested it, and we gapped down today. The gap down for some would be an instant, yes, I need to jump in, but we had a retracement, and we pushed right back up to that level. Once we pushed back up on it, Aaron, that gave us an opportunity to look at bearish positions. That was here. That came in just shy of 10 a.m. this morning is when we pushed up, and we started to roll over by about 10:10 in the morning. That's our first second rollover period. 9:50 to 10 o'clock is the first one, and then 10 to 10:10 is the second timing of the day where you start to see, from a day trading standpoint, you start to see rollover. And this rollover has been very nice up to this point. We are still focused, as we said last week, on this level right here. If I just scrunch this down at 38.55, which is that 20% retracement. And there is a strong confluence there with a fib line as well. So we want to see if that level, that 38.55-ish level holds. But I think that's our next point. I think we need to test it, if nothing else, before we can get any kind of strength again. But we've now shifted into a completely true bearish bias where the 8 moving average, pink, is on the bottom, the green is in the middle, and the brown is on top. So a lot of strength in that bearishness in the market.
Got it. Yeah, I think right now a lot of people have just lost like any sort of confidence that they know what the market's doing, where we're going. I think, and that's why I like how your strategy, like how you're trading right now. Like you said, you can get back in that position 1 in the chair and just lean back and watch as you're, as the market's kind of unfolding here.
Exactly. And that's just it. I mean, look, we did, what happened with Adobe today, right? Earnings came out this morning. They had the news of the company that they were buying, which they're probably paying too much money for, and Adobe tanked today, right? Let's see. ADBE, right? So this was Adobe's drop in here today. If we look at it from a daily chart, first, everything for me has to go back to a daily position. Everything has to work its way back to a daily chart first, because that's where all my decisions are made, is on a daily chart. We gapped down today. And on that gap down, we blew through one of our fib lines. Well, I mean, we went through multiple fib lines, but we had blown right through this last fib line, and we opened right here on the day, that top of the body, right? Black candle. And if you look at it from an intraday standpoint, right, we pushed back up. So we gapped down here. We pushed right up into that fib level, and we got a rollover. I mean, can anybody raise their hand and say, yeah, and they can't really raise your hand because I can't see y'all, but are you with me that that is a place that gives us the best opportunity to take a bearish entry as we roll over, not as we're pushing up on the first candle, as we roll over? Because if I'm wrong, my stop is going to be set just above that level and I'm out of the trade. I've got the smallest risk possible. So I can jump into that trade. Even if I'm wrong, I've completely minimized my risk. If you waited till it got down here, or even if you took it on the open, your risk dramatically increased up to here because your stop doesn't change. You don't say, well, I'm getting in down here on a bearish trade, so I'm going to move my stop to here. No, your stop is still in the same place. Your stop should be based on what the chart is telling you, not what your wallet is telling you. If you look at this and say too much risk, then it's not a trade for you to do. And that's okay. You find a different company.
Yeah. Anyway, here I'm gonna go full screen on this real quick to show the whole chart. I really like trading Adobe. It's just that the options are really expensive for me.
They are. So today's options were 15.10. Now remember, it's Thursday and we're trading tomorrow's options because I plan on being out of this today.
Okay. And let me ask the chat here while we got you here, Rob. If we've got any tickers, you know, that we want to check out on the chart, please let us know. Make them like some real, you know, I don't want to see some $2 penny stock. That's not really what Rob's looking at most of the time.
Yeah, that's not me. I mean, listen, I'm all for you. If you can make money on those, that's awesome. You know, if you've got a major company that you trade, I follow the money, follow the cash flow, follow the money, and I go after the bigger stocks because by trading options, you can still capitalize on these very big stocks with very small amounts of money. I mean, right now, I'm not saying now is a good time, but if you took an Adobe trade right now and you were bearish, you'd be looking at something with a 65 to 85 delta. So here we're at 69 delta, and you're in at about $10.35 would be your cost in the trade. So $1,015 to do one contract. For some, that might be too expensive, and that's okay, because there are other stocks out there that have options on them. I don't know, like Apple, right? Which will be a much cheaper option than an Adobe will. We look at Apple. We want that same 65 to 85 delta. Here we're looking at 76. I could trade Apple for $3. For every dollar the stock moves on Apple, the option is going to move 77 cents. I'll take it. I don't need to buy Apple shares. I can do this investment for $300 for one contract.
Got it. Yeah, that's a good. That's some good risk reward there.
Absolutely. Assuming the stock fits your risk profile, you like where it is on the chart. I'm just using Apple as an example. I did take a trade on Apple today, and I got smacked on that one. I took a bullish trade. I tried to get that bounce in on Apple and went the other way. We didn't get hit much. It cost me 60 cents in the trade, so not a big deal. Adobe was the home run for me today.
Yeah. All right, let's see. We've got a couple tickers in the chat. Trend Spotter wants to look at Snowflake.
All right, so let's go take a look there at Snow. Let's get a little bigger picture. We can see the entire fib. So the Fibonacci is good. We have now bumped our head twice on that 100-point level, which is also the 618, the purple line in there. And today we're pushed up. We're in a true bullish bias, meaning all three moving averages are in the correct order. For me, I need a break above the $200 level, come back, retest and bounce, and 218 is my upside. You could trade the downside if you roll over. The 8 moving average is very close to the fib line down here. But my preference would definitely be to take the upside trade on this if it continues to make its move. It shows that we're down 6 or 7 cents right now on the day. You got to be careful with that little, we'll call double top pattern. When we came back and tapped that same level 2 times, we may get that rollover. And with the markets down as much as they are right now, this may be running out of steam at this point.
Got it. Let's see if we've got any other tickers. Oh, Easy Mike wants to look at Snap or Pinterest.
Yeah, we can do both. Snapchat. All right. So as you can tell by the lack of Fibonacci's, I haven't been here in a while. We've got to really go back, and those fibs are old, outdated, and not usable, the ones I have there any longer. So we need to draw a new set of fibs on Snap. So let's come here. We're going to snap, no pun intended, a new set of Fibonacci's on there. And let's bring it in a little bit. All right, there we go. So 12 to 18. We probably need to put on there something that is called a Fibit. Yeah, we definitely do. All right, so we need to split these levels in half multiple times. It's just, it has had such a dramatic move. There's not a lot of room on it any longer. So, meaning it doesn't move very much on an intraday basis. So we're going to put in negative 136. I'm going to put in this one, 59, 18, 177. Okay, so we need, when you get all of these lines in there, it's telling you that this drop was so bad, we're overextended the way that we have to draw lines. Now, from there, I'm going to zoom in, make it a little bit easier to see. We're up today, but look what's happening with our moving averages. They're all mixed up, right? The 55 is on top. You want numeric order. I want either the 55, then the 21, then the 8, or the 8, the 21, and the 55. I want them to be in the correct numeric order. I don't care if they're inverse. That would be bearish. If the 55 is on top, bearish. If we get below this 21 with a price and the 8 moves down, the pink line is the 8, moves down, we're looking at a bearish move, but we only have the room down to 1070. So 1070 and 1255 are support and resistance right now on them. And if you're trading these, you can get options on them very inexpensive. I'd probably be looking more at that 75 or 80 delta on something like this because it doesn't have a lot of room as potential to go on this, right? There's just not a lot of opportunity there.
Got it. All right, let's see if we've got any others.
Pins was the other one, right? While you're pulling up.
Oh yeah, we haven't gotten a pins yet. Yeah, and then Golden Cross wants to see a either DXY or a SPY, or actually he wants to see DX. I don't know if you do. He said DXY versus SPY. I don't know if you do like comparisons like that, but I don't know. I don't know how much time you have. We have a few more minutes here.
Yeah, I'm good. I've got some time, so whatever you got. So on pins, I like the pattern on pins. 265 is our Fibit. 23, 4, 5. Yeah, we're okay. We don't need to split this level. So here's the thing. We're sitting on pins closer to that top edge. Moving averages are in the right order, bullish. We're sitting closer to that top level, which is that 25.65. I'm always leery on bullish in a bearish market if it's not a stock that I regularly trade, and this one is not. You know, I took the Apple trade today, even though it's not one I normally go after, but I took that trade as an opportunity today. This one, I'd be leery at this point of the day. If you got in off of the bounce off of the 8 moving average, which was about 24.5, you know, you pushed all the way up as a high today of 25.5. That would have been a trigger to get out. For me, I needed to pull back to a moving average and bounce to take an entry, or break out of the 25.67, bounce and take off from there, and that would be my new entry on pins.
Yep. All right. So let's go over to the SPY or DXY real quick, and then Patrick.
SPY's an easy one. That one I look at every day. So SPY had a good setup today as it pulled back into that same 618 level, which is that major Fibonacci level. We pulled back up into there and failed right off of that level, right? 385 and jingle is our next downside target. And remember, for those that many of you know who this is, some don't. This is an ETF that tracks the S&P 500. So we have a similar pattern here as we do on the S&P. It's not always exact, but they're very close in pattern. You can do an overlay and you can see the comparison between the two. Excuse me. We're looking at that 385 to the downside. And if we go back and touch on the S&P 500 again, we're looking at that 3864 as our downside target, right? So same thing of what we're looking at on SPY, we're looking there, and we're going to wind up similar fashion where the 20% bearish market is. If you compare it on the SPY, that we're not that far away from there at this point. So I like the bearish trade. The entry came in right out of the gate today. If you look at pivot points, right, this is SPY, right? We had a nice push up. We failed, and I didn't take the breakout here because I didn't trust the move. I saw the rollover. I didn't take a SPY trade at all, but I saw the rollover take place after the fact. We came down on a 1-minute candle. We retested, and we dropped, and we moved from the pivot point, which was that 394 level, right down to the S1, which was that 392. So you had a $2 move on SPY today that if you had a 70 delta, you're not going to get the whole $2 move. Say on a 70 delta, you got with $2, you got $1.50 move. You're looking at about $1 profit on an option that you would have spent $4 or $5 on today. So 25% on SPY today.
Yeah. And then I don't even know what's DXY. Is that the
Well, let's see.
Oh, that's just a dollar index.
Yeah, so DXYN I have, but this is consumer durables, home furnishings. I don't have a DXY on this, so I'm not getting that data. I don't know if it's part of anything else I pay for on TradeStation. DXY. Yeah, it says failed symbol. Data request failed, incorrect symbol. So sorry, I don't have that one on either of my data feeds.
Yeah. Okay, all good. Let's do NVIDIA then, and then wrap up.
Okay, so we look at NVIDIA. NVIDIA is one of the stocks that we trade regularly on one of our main programs, which is called Power Options Plays. That was the list that I shared with you guys here of the closed trades that we're looking at. This is Power Option Plays. Okay, we don't have anything recent on NVIDIA. Let's see, the last one we did on NVIDIA, it's been a little bit, was right here. That was on August 16th, $390 on NVIDIA. So nothing great there. But I do like it. They're one of my favorite companies to day trade right now. I like them a lot. So NVIDIA is sitting right near a support level at that 128.38. The instant reaction from most traders right now is let's go ahead and trade it bearish. And you can, if it violates that next fib line right here, you could get the bounce and the fail, and you could take that trade. And I would give that trade, if I were grading it 1 out of 3, I would give that a 2. And in other words, it's near a fib line, but it's not the best setup. If instead we can get a retracement back up to the 137.47 and fail where we have a confluence, I would give that a 1. That is my best opportunity at a bearish entry. This is, folks, this is why we trade 20 different stocks, is because you're not going to get a stock to set up every day. It's been 3 weeks since we've done a trade on NVIDIA. The setup isn't there on a particular day. We don't take the trade. We only trade it if all the stars align, we look to take the trade. If they don't, we won't. And we're at, I don't even remember now, it's over 200 trades for this year. We are at 301 minus 3, so 298 trades for this year so far. Actually, we got 4 more here. Right? So we're over 300 trades on the year with not trading NVIDIA for the last 3 weeks. So we shift between whatever's setting up properly at that time.
Yeah. I've been so lost on, like, again, I came in from a conference this week, haven't been watching the markets. Like, it just seems like there's been a lot of volatility, but we haven't really, we had that terrible day Tuesday. Today we're now, I'm checking out, coming back a little bit, it looks like, on the Qs, but still down 1.4%. Like, where can we start looking for some turnaround on a macro perspective?
So for me, it all comes down to the S&P 500. I can look at NASDAQ as well. But to me, the S&P is the index that I focus on the most. As far as recovery goes, The problem is you have individuals that are in control, and they're called politicians, right? That they may not necessarily be doing what's best, right? And I don't care who the politician is. It doesn't matter. If their lips are moving, they're probably not telling us the truth, right? So we can't trust with all the news that's out there how valid it is. I mean, yesterday we had the bad CPI. The president came out yesterday or that day and said, hey, the Build Back Better plan is working. And maybe it is, but the CPI did not tell us that at all with as high as it's gone, right? It increased again. PPI is up. Unemployment was down a little bit today, right? That's the third factor in there. But I'm looking at that 20% line, Aaron. I think we're going to test it. And right now, until we test that level, if we break, I think we're breaking down to at least 25, if not 30% to the downside from the all-time highs this year. We'll see that drop to at least 25%. It will be our next target. And I've got to do some analysis. I'm waiting for the 20 to see what it does before I work on where the next level is down below. But I think we go further down if we violate to the downside. If we move up, I need all three moving averages to be in the right order, right color, right order. And I need, actually, let me do it this way. Let's bring this in a little bit because it's a little small for you guys that are at home. As I'm looking at it on a 21-inch, 22-inch monitor, it's easy to see. I need to stop seeing lower highs and lower lows. We kind of bottomed out here. Wasn't exactly a lower low, but we're not there yet, right? We haven't bounced off of this point. That continuation pushing down below here tells me we're looking back at that 20% retracement in there for the bear market. But until we can get the moving averages corrected in the right order and we get above them, there's nothing that I'm really interested in saying, let's go long. I'm looking to add shares of Amazon to my portfolio. I'm looking at putting in some Apple, putting in some Google, putting in some Tesla, and I'm not ready to take that. Google may become a desperation play if we can break 100. I may buy it just because I know it's going to go back up from there. I believe. How about that? I don't know. I believe it's going to go back up. It may take a couple of weeks, couple of months. It's long term for me. But when you look at covered calls on these things, folks, you can crush it every single week on covered calls on these candidates. So I need to get some moving averages fixed, Aaron. I need to get the stock moving in an upward direction above the moving averages before I want to consider anything bullish, which is going to take it getting above the previous lower high right here.
Yeah. Sorry, I was lost there catching up on the chat. Golden Across or Easy Mike saying Netflix putting in the work. Have you checked out Netflix at all recently?
Yes. We traded it today. Did a bull put spread on it, picked up 30 cents, gave back 10 to close it out. I thought we switched over. Did not. It's probably on a different screen. Oh, there we go. Okay. So great setup. Sorry I missed the bullish entry on it today. Just took the credit spread, did not take the entry, 232.57. Let's, for kicks and giggles, look at that on Netflix. And what was it? 232.57, I believe, right? Let me go see what that was. 232.57. Right? Yes. Okay. So let's change this over to that 232.57. All right. So we got this break above that 232.57. If we turn this into a 1-minute candle and look back near the open of the day, right? We pushed up. Didn't get a real good retest of it. Our low on this candle was 233.17. So we're about 50, 60 cents above. So it's not horrible. But we did on that breakout, and that's what we had to wait for, was the close above. That was the entry. I would call this an aggressive entry. I would take a smaller number of contracts because I didn't get a retest of that 232.57. On a 5-minute candle, again, we did violate it in here. Came back up and started back on that climb back up higher again. So it's been a nice mover today. Our credit spread was fairly short. Today when we were in it, we took the credit. We got out pretty quickly. by giving the 10 cents back. Closed it out for a lock-in of 20 cents on it. But I like Netflix, like them a lot. Always have, and even now at this price level, this 250, 300 level, I think it's a much better stock than we were at that 500. I think they were just way too expensive up there.
Yeah. All right, Rob. I think we've gotten through all the tickers in the chat. We're coming close here. Do you have any final thoughts? I guess as we round out the week, round out the trading week. Anything you've been watching?
So I've got a couple of tickers I'm watching. I'll give you guys some symbols to take a look at.
Okay.
Keep something in mind, folks. Right now, 75% chance of a 0.75% rate hike. 25% chance of a 1-point rate hike. They're not even considering after CPI anything under a 3/4 rate hike. So just as an FYI, make sure you're focused on that. Keep that number in mind. It may change before it comes up, but keep that in mind that increase it can potentially have a dramatic effect on the market. 3/4 will be bad. 1, I think, will easily push us down below that 20% retracement level, right? So we've got a couple of tickers, guys. If you want to look at them real quick, Adobe is one that is still there, guys. And what I need to look at for Adobe is, does it close near that 306 level? And then it becomes a switchback trade. You can either get a bounce or a fail off of there. Adobe's got room down to 300. And then on the downside, 327 on the upside. So there's a lot of room on Adobe. All right, Autodesk, ADSK is another one. Look where we are. We're sitting right at that 201 level, 201.5. If we break 186 as my support on the upside, my resistance is going to be my 8 moving average, which is 207. All right, so look for the bounce off of there. AMD, this came up in our chat this morning by one of our students. He called it as a switchback trade. Trip is the individual I'm talking about. We were closed right at that fib level. We gapped down, retested, and failed, and gave us a great entry into the trade. I'm sure Trip was all over this today with that setup, as were many others that were in our chat, I'm sure, today. And one last one is Baidu. Baidu is setting up as another switchback trade right now. Switchback just means we're sitting near a key level, and we can move in either direction. There are some kind of support and resistance, and enough room for us to make money regardless of the direction. We just need to do what? Move one way or another, up or down, it doesn't matter. Let's say it moves up, come back and retest and bounce. If it drops, pull back up and retest and fail. You take the entry off of there. Your stop is just on the other side of the line, and your target is just above, as an example, to the downside, just above that 118.27, maybe 119.25, 119, somewhere around there is where I put my target for it. And that's it. Practice the trades, guys. Practice the trades. And if you go to tradinglikeaboss.com, which I'm sure Aaron's going to drop that in for you guys, there's a thing over here with Trade with Rob. That's where I send out these trade setups on a regular basis. Register on that link. You'll get some resources on how to trade these as well. It's all free. There's no cost for it. It's all free. My goal is to make sure that every one of you have the best opportunity to learn how to trade. I'm doing this for 20 some odd years. I've traded thousands, tens of thousands of traders. The systems work. You just need to find the right system.
Beautiful. Well, tradinglikeaboss.com. There it is. Go check that out if you want to learn more from Rob. Again, Rob is truly one of my favorite guys we bring on the show because he's, as an options trader, I look at Rob and I'm like, God, man, he knows what he's doing. He knows what he's doing, right? So, Rob, thanks again for coming on the show. We will have you back next week. Or you're in Florida, so you're
I'm in Florida next week. I was going to send you an email, but yeah, I'll be in Florida next week. I'll be with 5,000 of my closest friends at a conference next week. So,
what conference is that?
It's a marketing conference. It's called ClickFunnels.
Oh, okay, awesome. All right, Rob. Well, enjoy the rest of your day. Enjoy Florida next week. Enjoy the nice weather. I don't know if it's going to be hot down there or what, but hopefully it'll be nice weather for you. Hopefully you'll get to hang out by the pool or beach, wherever you are.
A little bit, yeah. I think so. I'm looking forward to it.
Beautiful. All right, man. Well, thanks again, everybody. Smash the like for Rob and go check out that tradinglikeaboss.com. Rob, enjoy the rest of your Thursday.
Thanks, everyone. Be safe. Make sure you stay liquid. Talk to you soon. Bye.
There you go. That's the big key. Stay in liquid right now. We don't want to see anyone's accounts get blown up. All right, guys, we've got about 10 minutes left. We can do some tickers from the chat. We can run through some of the top headlines of the day. Let's see what our biggest let's see what's going on the BZ homepage right now. Oh wow, I didn't see this. Kanye West Yeezy cuts ties with Gap. What you need to know. Let me go ahead and share this. Of course. So I thought Yeezy was all right. Let's read the article. This might give me some background. All right, Kanye West and Gap Inc. All right, we see Gap stock is down 3.4% today. I'm not ready to attribute that to the Yeezy news, but let's keep reading. In June 2020, West announced a partnership with Gap to design and sell a clothing line under the Yeezy Gap brand. All right, here's where I was confused because I thought the whole Yeezy thing was a collaboration with Adidas in the first place. Anyway, according to a Wall Street Journal report, West's lawyers sent a letter to Gap on Thursday notifying the apparel chain West is terminating Yeezy's arrangement with the company after Gap breached the agreement. The letter reportedly claimed that Gap broke the agreement by failing to release apparel and open retail stores as planned. West complained about the deal, among others, on social media recently. At the end of August, West posted a video directed at a group of Gap executives saying, you have to really give me the position to be Ye and let me do what I'm thinking, or I have to do the thinking somewhere else. So Kanye told them, he said, hey, if you want to work with me, you got to let me do whatever it is I want to do because I'm Kanye West or else I'm gone. And he's following through on his claims. West announced plans to open his own Yeezy stores following continued rants on social media at the beginning of the month, targeting both Gap and Adidas. The claims the rapper turned designer posted on social platforms have since been deleted. The details. According to the letter from West's lawyers, Gap was required to sell 40% of the Yeezy Gap assortment in its brick-and-mortar locations during the third and fourth quarters last year, but that didn't happen. A Yeezy Gap hoodie became available in the fall 2021, but it was only available on Gap's website, the letter claimed. So I guess they had a plan that the clothes was supposed to be, in the stores, and that wasn't the case. Only online. Products under the Yeezy Gap brand didn't make it into the stores until French luxury house Balenciaga got involved and debuted products in July 2022. All right. So, I mean, basically, I don't know, if you have any big takeaways from that in terms of the stock market, or if you're a Gap shareholder out there, you've been looking at trading the stock. But regardless, basically, just a deal gone bad. Ethereum completes the merge. Let's check out Ethereum. I mean, how's that doing? Let's go back to Benzinga Pro. Crocs. Kevin Fu, thoughts on Crocs? Daily looks like it's going to be crossing the 200 moving average with cup and handle breakout. It's tough, man. I mean, it's hard. I think in this macro environment, it's hard to look at a chart and say, this is looking great, because even if it is, right? Fed makes a surprise announcement next week. They're going to a full percent instead of 75. Boom. What happens? I don't know. I mean, I think one stock I've been looking at, Ulta, this was making new all-time highs, right? And the conventional wisdom in stocks is you want to buy low, sell high. But what a lot of people will tell you is that when a stock is making new all-time highs, when it's breaking out and people are buying it more expensive than it's ever been, you should listen to that. There's a reason. So I think, oh my God, this company Ulta, which if you're unfamiliar, it's a makeup brand or makeup store essentially. It's like the Walmart of makeups, right? You go into an Ulta, they have everything you need. To me, I saw it's making new all-time highs. The business super strong. Oh my God, it's on my buy list. But do I want to buy it in this macro environment? I mean, we hit the all-time highs. We went from 451 in about 4 trading days. We're back down to 420. I I might, even though I like this company, I think it's in a very good position right now. The street obviously likes it because it was making new all-time highs. I might still wait on it. And I mean, even I might think the same thing with Crocs. Even if I like it right now, I might kind of want to see how some of these things shake out. Maybe that means I end up missing out on a few extra percentages. But who knows? But let's go back to ETH. That's what we came here to check out. Holy cow. Man, oh man. All right, well, here's the good news about ETH. You're still above this consolidation level we were trading at in June at around 1,100, 1,200. We're still 1,500. Bad news, since about August 15th, we've been making lower highs and lower lows in a downtrend here, certainly. Let's see, looks like we got to a low of 1422 here. So if we get to 1422 and bounce, that could be interesting. But for the most part, I mean, this thing just is in an ugly downtrend from 3,500 in April down to 1,000 flat in June, bounced back up, went from basically went up 100%. Look at this. From July 08, we were at $1,000 around, not exactly. Bounced up 100%, gave up a lot of those gains. So it'll be interesting. I mean, I would want to see, you know, from this is just on the daily chart here. I would want to see if we do come back and test these lows, because it's not like this was just a little low that we hit, right? This was consolidation. We were soaking down here for a while, soaking up all this consolidation from June 15th to July 15th for basically a straight month. You got some bounces in here, but basically for a straight month, trading down here at this $1,000 level, showing me there's buyers down here. This ain't going to go too much lower than that. But now if we come back and retest it, and it does, then that's certainly bearish. If we start consolidating down here again, right at the same level, I'm going to start accumulating some ETH. I'll tell you that much right now. Digital currency trades of the day, DXY and TNX. Yeah, we'll check out some of the TANs. I think some of these solar names have definitely cooled off over the last couple weeks. Well, holding up actually. I mean, compared to the overall market. What do I know? What am I talking about? All right, guys, it is 12:58. Time for us to wrap up the show. If you guys have any final words, any final thoughts, speak now or forever hold your peace. This stream will automatically redirect you to Money Mitch coming up at 1 p.m. Mitch has a big show coming up. Mitch will be talking to, let me pull up the guest list real quick. Mitch will be talking to, oh, wow. Mitch has a big, all right, Mitch will be talking to Clean Spark. Clean Spark at 1:15, CLSK. You guys know that's one that I've traded a lot before. Andrew Thrasher, portfolio manager for the Financial Enhancement Group and founder of Thrasher Analytics, will be on at 12:45. So Mitch is talking to some big names today. Again, this stream will automatically redirect you over there. No need to click anything. No need to go anywhere. You can go ahead and put that remote control down. I love you guys. It's good to be back. We will be back tomorrow. As always, if you don't already, give me a follow on Twitter at AaronBree5. Instagram too, if you want. I don't know. Jonathan Loveless saying lots of puts going into Affirm. Maybe we can check out Affirm tomorrow. The buy now, pay later space. I mean, man, that thing was hot for a second, and now it is not. Love you guys. Stay tuned for Mitch coming up now.
This is Benzinga.